What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. On this channel, we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals, going over S&P 500 and the Nasdaq 100, but also breaking it down from a technical standpoint for stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had some sort of mixed day in the markets. We had bad economic data coming out from China this morning because there was a miss when it comes to GDP growth. So the expected growth wasn't reached by the Chinese economy. However, the markets looked the other way, and the Nasdaq 100 absolutely killed it today. Nasdaq went up 0.84%, Russell 2000 and Dow Jones pretty much broke even. Dow Jones went down 0.10%, and the Russell 2000 went up 0.10%, and the S&P 500 went up 0.34%. And when it comes to the sectors that trade inside the S&P 500, the best performing sector today was consumer discretionary, which went up 1.21%, thanks basically to Amazon and Tesla, which were a couple of stocks that killed it today. And the second best performing sector today was technology, going up 0.83%. The financial sector, which is a very important sector inside the Dow Jones, and that's the reason why the Dow Jones went down a bit, 0.10%. So the financial sector pretty much broke even today. So it didn't go either up or down, and that's the reason why the Dow Jones broke even. And if we take a look, guys, and before going over the indices, if we take a look at the most important earnings that are going to be reported throughout this week, so it looks like the fun is about to start tomorrow, guys. So before open, we have Johnson & Johnson, we have Halliburton, we have Ericsson, we have Procter & Gamble. And after close, we have the very first big tech company reporting earnings. I am talking about Netflix, which is reporting earnings right after the close. And when we talk about Netflix, guys, the big question or the $1 million question here is Netflix actually going to be able to bid on new subscribers? Because we have seen Netflix pulling back substantially after having reported earnings during its last 4 earnings report. And since Netflix released this series, The Squid Game, like 2 or 3 months ago, can that series have a positive effect when it comes to Netflix new subscribers? We will find that out tomorrow. Then after close, we also have United Airlines, and on Wednesday before open, we have Verizon, we have Abbott Laboratories, we have Nextra Energy, we have Nasdaq, the exchange, and after close, we have Tesla. You guys know that I am a long-term investor in Tesla. And as of now, I am debating myself between either buying put options or not buying put options, guys, because I would like to have some sort of protection towards my long-term positions in Tesla. So I haven't made up my mind yet. And yeah, the implied volatility is very high, so I might not buy those puts. And Tesla, as of now, is very overextended. So I think that we have the perfect combination when it comes to this next earnings report. So Tesla is pretty much at all-time high. It is very overextended. And on top of that, Tesla has sold off aggressively after having reported earnings during its last, I don't know, like 5 or 6 earnings reports. And mind you, guys, I wanted to show you this. So big short investor Burry says he's no longer betting against Tesla. So he cut the loss. He was wrong. He got Tesla wrong. He's not the first short seller that loses money shorting Tesla. And I found this interesting, guys. Take a look at this. So this is a tweet from Michael Burry that says, how do you turn a few 100,000 into a few 100 million? Become a journalist, read a 13D filing, report on it, voila. So he is saying pretty much through this tweet, what I already told you guys when the news came out about Michael Burry taking a huge gamble on Tesla. I told you, this guy purchased put options. So we don't know about the expiration date of those puts. I think that the strike price is, it was disclosed that the strike price was $720, or someone detected an unusual options activity in the case of Tesla that might be the case of Burry cutting the loss. So apparently the strike price was $720, and he only invested something like, my guess is that he invested something like $500,000 against Tesla via put options, right? So this was not a huge gamble against Tesla, and the media pretty much reported this news the wrong way, probably with the intention of catching the eyes of as many people as possible, because they said that Burry had taken a gamble of $80 million against Tesla, and that wasn't the case. He purchased put options that if those put options had been in the money by the expiration date, would have gotten control of $83 million worth of Tesla shares. So that wasn't the case. He took a small loss. This guy moves a lot of money, so he's out of Tesla. And this is another, let's say, short seller that gets Tesla wrong. So okay, let's let's keep on taking a look at the earnings. So on Wednesday, after close Tesla, I already told you. Then we have Lam Research, and mind you guys, Tesla's going to beat on earnings all across the board, revenue, EPS, the whole thing. But it always sells off after earnings. So put options seem to be a no-brainer, but those puts are very expensive, and you never know. You never know. So then we have Lam Research, we have Las Vegas Sands, we have IBM, and we also have Crown Castle, which is a very important stock inside the real estate sector. Then on Thursday, we have AT&T before open. We also have American Airlines. We have Crocs. We have Southwest Airlines and Ally. Then after close on Thursday, we have a Snapchat. I think, guys, that Snapchat and Facebook are going to kill on earnings. That's my hunch. We will see if I happen to be right or not. Then we also have Intel, we have Chipotle, we have Samuel Adams, we have Mattel, we have Whirlpool, and then on Friday we have Schlumberger, and we have American Express and Honeywell as well. And Regions Bank, we can make the case that if the 10-year Treasury yield, which by the way went up today but just a little, keeps on going up, then maybe Regions Bank could be a 10-year Treasury yield play. Let's just put it that way. So let's see what happens tomorrow. In the case of Netflix, I am going to be recording tomorrow's video by the time that Netflix reports earnings, so you guys are going to get a live reaction from me. Okay, before going over the S&P, because I always do it, I want to show you some trades that I closed in today's trading session. And the first one, guys, is going to be once again Pinduoduo. So I did it again, guys. This is like, I think that this is like the fourth trade that I take with the stock of this company in the span of, I don't know, like 1 week or 1 week and a half. So on October 14, I purchased 100 shares of Pinduoduo at $94.68, paying $9,467, and I sold out of these 100 shares this morning at $96.49, and I was paid $9,648. So I ended up making over here something like $180. Nothing crazy. This was a base hit, but remember that base hits are the ones that put you in the Hall of Fame. And additionally, sorry guys, I bought back a put that I had sold on Wynn Resorts, guys. So take a look. On September 15, I sold the $90 put that expires on October 29, and I was paid $910. And I ended up, most of the reopening plays were having a tough day today, guys. So I decided to, play it safe. So I bought back the put that I had sold, this $90 put that expires on October 29. and I had to pay $224. So I ended up making over here $686. And I also have a screenshot over here, guys. I also bought back a put that I sold of NEO last week, guys. So on October 7th, I sold the $35 put that expires on November 26th. And I was paid $260. And today I decided to, NEO was very overextended today when it was getting closer to $40. So I decided to play it safe, guys. And profit is profit on top of that. So I bought back this put, and I was paid $106. So I ended up making over here $154. Today was a very, very solid day for me, no doubt about it. And now let's go ahead and take a look at the S&P 500 and take a look at the relative strength index. First of all, as I said in the introduction of this video, the S&P went up today 0.34%, and it closed today's trading session at 4,486 points, 4486. So in technical terms, guys, the S&P is getting once again very overextended and overbought. We can see the relative strength index sitting at 72 points. We have seen before the S&P trading with its RSI at 85 points, way higher. So can the S&P keep on going up? Yes, it can. But the healthier scenario for the S&P would be pulling back a bit, finding support at around 44.42, which happens to be a previous area of support that acted as such on two occasions for the S&P, and it is also a former area of overhead resistance in which the bulls of the S&P failed on two occasions back in early August. And the S&P has to start to consolidate without going any higher above 44.40, guys. That is going to be the healthier scenario for the S&P. We don't want the S&P to get extremely overextended. And as long as the bulls remain trading above 44.40 and above the moving averages on the 4-hour chart, they are in absolute control of the S&P 500. So we are not in any danger over here if we happen to see some sort of pullback in the case of the S&P. In terms of overhead resistance, the next important spot for the bulls of the S&P is going to be none other than 4,500, guys. 4,500 is a previous area of overhead resistance in which the bulls failed back on August 25th. We are also talking about a former all-time high for the S&P 500. So the S&P looks very, very bullish, but I don't like the fact that the main index of the US is getting a bit overbought, and I would be very happy to see some sort of retracement down to 44.40, 44.50, and I would also like to see some sort of sideways trading for one or two trading sessions so the relative strength index of the S&P can cool off a bit. And in the case of the NDX went on an absolute tear today, guys, going up 1.02%. So out of the four major indices, Nasdaq 100, Russell, Dow Jones, S&P, the best index out of the bunch was by far, and including obviously the Nasdaq over there, the best performing index was the Nasdaq 100, which went up 1.02%, and it closed today's trading session at 15,300 points. So let me zoom in here on the 4-hour chart and take a look at the relative strength index, guys. The RSI of the Nasdaq 100, it is very elevated, 74 points. So the next important area of overhead resistance for the bulls is going to be 15,381 points, which happens to be a previous area of support that acted on multiple occasions back in September. And we are also talking about a former area of overhead resistance in which the bulls of the NDX failed back on August 25th. So can the NDX fill this gap and burst above 15,385 points? It can happen. It could very well happen. Take a look at the relative strength index of the NDX. So the Nasdaq 100 has traded before with its relative strength index being at very elevated levels. However, this is not the scenario that we want to see. I would prefer seeing a retracement down to this 180 SMA on the 4-hour chart, slightly above 15,150 points, which happens to be a previous area of overhead resistance in which the bulls of the NDX failed on 9 occasions. And we are also talking about a former area of support back from August 23rd. And if we happen to see a retracement or a soft pullback down to 15,150 points, that is going to let the RSI of the NDX to cool off a bit, and therefore the bulls can gather momentum slightly above an important area of overhead resistance, slightly above 15,150 points, to then make a push higher and take on 15,385 points without the Nasdaq 100 being in an oversold condition. So let's see what happens tomorrow, guys. I would rather, as I just said, I would rather definitely, to see a process of retracement down to 15,150 points, 15,200 points, instead of the bulls bursting above once and for all 15,385 points, because in that case the NDX is going to get extremely overheated. And now let's go ahead and take a look at good old AMC Entertainment, and the bulls, or the apes of AMC, are starting to take over, guys. Watch out for this. AMC went up today 5.62%, and it closed today's trading session at $43.03. So let me zoom in here on the 4-hour chart and take a look at how, guys, the bulls of AMC today had a phenomenal day. First of all, they were able to take on this 180 SMA on the 4-hour chart, and then they managed to burst above an important area of overhead resistance at $42. $42 is a previous area of support that acted as such on 2 occasions back in September, and it also acted as support on 2 occasions back in June. So, and since the relative strength index of AMC is getting a bit overheated, it is at 75 points. That doesn't imply, guys, because we know that when AMC trades on good volume and momentum, the stock of this company can trade, as you guys can see over here, with its RSI being at 90 points or 95 points or something crazy like that. So obviously, guys, the bulls of AMC could be able to fill this next gap up to $46 once and for all. But the most, the healthier, let's say, thing that could happen for the apes of AMC would be starting to consolidate slightly above $42 for 1 or 2 trading sessions. AMC could do that, guys. AMC could trade somewhere between $42.50 or $42.50 or $44 for let's say 2 trading sessions at least. All right. So that is going to let the relative strength index of AMC to cool off a bit, and at the same time the bulls are going to be gathering momentum in order to make a push higher and take on $46.50, which is going to be the next important area of overhead resistance. When we talk about $46.50 or $47, we are talking about a former area of overhead resistance in which the bulls of AMC felt back in late August, and we are also talking about a former area of support that acted as such for AMC back in early June. So if the relative strength index of AMC were at lower levels, guys, let's say 60 points, 65 points, maybe 55 points, then a push higher, guys, could imply that the bulls or the apes of AMC would be able potentially to take on once and for all or fill the next 2 sorry, guys. That would imply that the bulls of AMC would be potentially able to fill the next 2 gaps up once and for all. The first one, as I just said, up to $46.50, and then the other gap up to $52, which happens to be a previous area of support that acted as such on many occasions back in June. So watch out for AMC, guys. I think that a process of consolidation slightly above $42, somewhere between $43 and $44, is going to be critical in order to gather momentum to fill the next two gaps up to $47, and then and after that up to $52. And now let's go ahead and take a look at NVDA, which is going to be the second stock of this video. NVDA went down today 1.45%, and it closed today's trading session at $27.10. And in the case of NVDA, guys, I sold puts on Friday, made good money over there, and today I started a swing position. I am a bull of NVDA. So in the case of NVDA, let me show you the puts that I sold on Friday. So let me see over here. There you go. So I sold 2 contracts, all right? So I sold, let me pull up the information over here. So I sold the November 19 puts with a strike price of $27.50. And I was paid for both contracts 300, 700. Yeah, I wish it were 700. So I was paid for both contracts $370. That was on Friday. Made good money over there with those puts, and I truly believe that by November 19, NVDA is very likely to be way above $27.50. And today, I purchased 200 shares at, I think that $27.20. Let me show you over here. So today, I purchased 200 shares at $27.25, and as of now, I have an unrealized loss of $30. I think that the prices that we are seeing as of now, in the case of NVDA, are very, but very compelling. So $27.20 is an important area in technical terms because we are talking about a former area of support that is coinciding with the 50 SMA of the 4-hour chart. $27.20 already acted as support for NVDA back in mid-July. It also did it back in early June, and lastly, it did it back in mid-May. So I'm thinking, guys, and this is my plan when it comes to the position that I just showed you. I'm thinking that if the bulls, if the guys, I was gonna say, I would be a guy of NVDA. So if the bulls of NVDA can consolidate slightly above $27.20 and gather momentum, the next important area of overhead resistance that they are going to have to deal with is going to be $28.63, which happens to be an area that coincides on the 4-hour chart with this 180 SMA. And I'm thinking, guys, that the second the bulls of NVDA take on this 180 SMA on the 4-hour chart at $28.72, momentum is very likely to kick in, and the bulls of NVDA are going to be able, therefore, to fill the next gap up to $32. $32 is a previous area of overhead resistance in which the bulls of NVDA failed back on September 23rd. They also failed back in early September, also back in early August, and lastly, they failed back on July 12th. And at the same time, we are also talking about, sorry guys, a former area of support that acted as such on 2 occasions for NVDA back in March. So if I were able, guys, to close this trade the way that I am describing it, selling out of my 200 shares at $32 from $27.20, I could be able to make a 15% profit. So don't sleep, guys, on NVDA, starting to consolidate slightly above $27.20. And the second stock of this video is going to be Bros. What's up, Bros? Okay, that's Bros. And wow, guys, this guy has been trending lately. So what do you know? The Dutch Bros went up today 8.15%, and it closed today's trading session at $57.35. And in the case of Dutch Bros, I live in Charlotte, in North Carolina, and we don't have any of these coffee shops around here. But I have a bunch of friends all over the place, and they're telling me that the coffee that this company makes is great. And they have also told me that the drive-thrus are insane. Something like Chick-fil-A, which we have a bunch of Chick-fil-A's around here, and the drive-thrus are absolutely insane, guys. The demand for Chick-fil-A, at least here in North Carolina, is absolutely insane. So this company is supposedly going to be a competitor to Starbucks. However, I was taking a look at the market cap of Dutch Bros. The market cap of this company is at around $9 billion, whereas the market cap of Starbucks is at $133 billion. So this company still has a long way ahead of itself in order to take on Starbucks, no doubt about it. So in terms of taking a trade with Dutch Bros, I'm going to pull up here the 1-hour chart, and guys, I really like $53.28. $53.28 is a previous area of overhead resistance in which the bulls of bros felt back on September 27 and also back on September 24th. And on top of that, we have a previous area of overhead resistance that is coinciding with this 50 SMA on the 4-hour chart. So if tomorrow the stock of this company happens to pay a visit down to $53.30, $53.40, I am going to be very likely, guys, to pick up some shares of Bros, or Dutch Bros, in which case my price target is going to be the area of overhead resistance in which the stock of this company failed today, but it also failed back on September 22nd at around $59. Let's just round it up. So picking up shares of Bros, picking up some shares of Dutch Bros from $53.41 and selling out of our shares at $59, we could be making a 9% profit. Jeez, guys, this is going to be the stock that is going to be on the very top of my personal watch list tomorrow. So don't sleep on Dutch Bros, retracing a bit and paying a visit down to $53.28. And now let's go ahead and take a look at the last stock of this video, Zillow. And the stock of this, the stock of this company got absolutely killed, decimated, obliterated in today's trading session. Zillow went down 9.45% and it closed today's trading session at $86. So let me pull up here the 4-hour chart. And guys, I didn't want to buy the dip today, even though the stock of Zillow is very oversold. We can see the relative strength index of Zillow at 28 points, but I want to let the dust settle a bit over here because we got bad news, guys. Once again, the situation of the disruption in supply chains is affecting stocks. So in this case, this situation is affecting Zillow. So let me see if I can find the news over here. So Zillow, okay. Online real estate listing platform Zillow Group is reportedly pausing its buying program through at least the end of 2021 after the company purchased more than 3,800 homes in the second quarter. Wow, that's a lot of homes, guys. So what happened? In a research note, no, this is not what is important despite, okay, so basically, okay, it says, despite the negative market reaction, Schindler said that there may be a silver lining to the pause for two Zillow investors. So let me see. So the stock dropped more than 7% on Monday morning after Bank of America analyst Nat Schindler I must be butchering the last name of this guy, said that the pause underscores the high degree of uncertainty in the iBuyer model and management's guidance and commentary surrounding its homes segment will now be a critical part of the company's third quarter's earnings report. Okay, here's the thing. So let me see. I don't see the news. Oh, man. So they are pretty much saying, guys, that they didn't find enough workers in order to remodel the houses that they are buying. And that's the reason why they have to pause the purchases of new houses. So obviously, this is something that is going to be supposedly transitory. So they are going, because this situation of the disruption in supply chains, we're going to, move past this. And yeah, the markets were relentless, guys. So yeah, the stock of this company fell off a cliff. But that's an issue, guys. They don't find I don't have the news over here. So that's the reason why the stock of this company fell off a cliff today. So they are saying like, hey, we would like to keep on purchasing more homes, but we don't have enough people to remodel, the homes that we are buying, and we don't have the stuff that we need either in order to keep on buying homes. So this is a situation that in theory is going to be transitory. So I think that Zillow is very likely to make substantial further progress later on down the road. Okay, so in the case of Zillow, guys, I'm thinking that $85.20, and even though I know the technical chart of this company looks horrible, guys, I cannot argue that. The stock of this company is on a clear downtrend. It is trading below the moving averages. And if I zoom out, we can see that Zillow is trading as of now, let me see over here, 58% of its highs. Jeez. I mean, this is a very compelling long-term discount if you happen to be a bull of Zillow. So, and since the stock of this company is very oversold, we can see the relative strength index at 28 points. We can make the case that if Zillow can hold as lower support $85.20, which happens to be a former area of support back from October 6th and also back from September 28th, that might be a spot in which the bulls of Zillow could gather momentum in order to make a push higher and maybe pay a visit to the next foreseeable area of overhead resistance for Zillow at $95.25. $95.25 is a previous area of overhead resistance in which the bulls of Zillow felt back on August 17, and we are also talking about a former area of support back from August 31st. So if I were able to take this trade the way that I am describing, that I am describing it from $85.20 up to $95, I could be making a 10% profit. Needless to say, guys, if I were thinking about a more ambitious price target, what about $105? Since we got bad news today, it is unlikely, that we see, it is unlikely seeing Zillow at $105 in the foreseeable future, but it could happen, and it might happen eventually. So from $85 each up to $105, we are talking about an 18% profit. And in the case of $105, we are talking about a former area of support that acted as such for Zillow on 3 occasions back in May. So watch out for Zillow, guys. I think that the news that we got are pretty much the bad news that we are getting from most of the companies out there. Disruptions in supply chains that are, causing problems and inconveniences. But the stock, this is an expensive stock. Okay, this is a company that trades on higher multiples, but I don't know, guys. I think that the stock of this company is very oversold, and if I happen to see tomorrow a process of consolidation slightly above $85, I might also think about buying a bull call spread, or maybe buying calls expiring in 3 or 4 months. We will see. But watch out for Zillow consolidating slightly above $85. And with good old Zillow, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses. It is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys once again tomorrow, 3 or 4 hours after the market closes. Peace out.